Hi everyone, today we're going to be talking about is the Gym Group stock a buy, and this was the comment that was pretty much most liked on my previous video, so I'll cover the Gym Group today. I have to say when I checked it was the most liked, but when I went back to get the screenshot of it, I noticed that Rolls-Royce actually overtook it. So what I'll do is I'll do a video about Rolls-Royce either later this week or next week. So I will cover Rolls-Royce because it'd be a bit unfair to not do that stock now that it has so many likes. So I will do Rolls-Royce at some point, probably next week I think, so I will cover that for you. But today I'm going to be covering the Gym Group stock, so if you could always give that video a like before we get onto it, that'd be absolutely amazing. It really helps the channel out, especially with starting again as well. So thank you so much for that, and especially for you guys that have now moved to the new channel, thank you so much for that. It really helps me out. But we'll take a look at the Gym Group today. Now I'm going to go through the fundamentals first, but what I'm going to say about the Gym Group to start with is that it is in a really good industry, because the health and fitness industry is an industry that is growing at the moment, so there's a lot of potential here for the company. It is slightly competitive, which I'll touch on later in the video, but the industry itself is an industry I like. So when I talk about stocks, straight away I could talk about a stock and go, but I don't like the industry, so I'm not going to invest into it. I'm not going to buy in this industry. It's like oil. When people ask me to talk about oil, I'll give you my opinion on it, but I don't like the industry, so I'm not going to invest in it. Whereas the health and fitness, the leisure kind of industry, I like the industry. I like that it's a growing industry and it'll continue to grow going forward. So I like to talk about stocks in industries that do really well. So for me, I like to talk about the Gym Group here. So I'll get stuck into some fundamentals. We'll then go into some details about the company, like the earnings report and how it's going to carry on growing. And then at the end, I'll talk about if I'm going to buy the Gym Group. So the ticker for this one is GYM. So they've got the cool ticker symbol tied down, which is always awesome. It's about £1.24 right now as of recording this video. It might change by the time it goes up. When we take it since its IPO, how well the stock has done, it's pretty much not done too much in the last kind of 5 years since its IPO. It's kind of gone up a little bit, but not absolutely huge. It is now down 50%, so it is a big massive sell-off in the stock. It is below its IPO price or something very close to it. So it is showing quite a bit of a discount right now, which is really interesting. You know, I do like buying into stocks that have sold off. I do like buying into stocks that have fear in them, because that's the only way you can get a lot of gains. Try and be greedy when others are fearful. And when we're going to Simply Wall Street, it does say that the Gym Group is currently 50% undervalued, which is quite ironic that it's pretty much down 50%. Now this stock does trade at quite a high premium. The PE is quite high on this one. I think that's kind of reflected when we get into the growth side of it, why it does trade at kind of a high valuation. But yeah, it is a very high P, but historically it has been quite a high P as well. And I think that's also got to do with that it didn't actually produce a profit for quite a few years as well. So it's not been a profit company for a very long time, even though it does make profit now. When we look at the revenue and EPS side of it, it does have fantastic revenue growth. It does have fantastic EPS growth. So I am going to treat this company more as kind of a growth stock more than a dividend or a value play. So I am looking for revenue and EPS. And that's why the PE is quite high. Growth stocks do tend to have a lot higher PE. They tend to demand a bigger valuation because of how much potential there is for the gains on this one. So it has the PE is fairly reflected when you look at this revenue and EPS growth. Fantastic EPS and revenue growth going forward. And previously as well, it's had some good revenue growth as well. I think the EPS was weak prior to this because of all the expansions that it was doing, which is fair enough. Sometimes, I always say this, that you've got to look at where the company vision is for going profitable, and eventually when it gets profitable, is that EPS going to explode? So the Gym Group has done fantastic here with its expansions. When we take a look at the balance sheet, it's a balance sheet that is getting better over the years. It's still not the perfect balance sheet, but it is an okay balance sheet and it's getting better. So it's good to see it is moving in the right direction. The only thing that I do have slightly worrying is 2.6 million in cash. So we'll talk about that in a bit and how that might be affected with obviously the COVID-19 going around. And 49 million in debt, which is quite a lot of cash to debt. I do like having a lot of more cash in hand, especially when you have a debt of 49 million. I would definitely be looking more to having, to be honest with you, 20 million in cash would be ideal. So obviously it's quite a bit off that, but it does have a lot of assets. It does have 414 million in assets. Obviously, when you're like a gym company or when you have just gyms in general, the actual sites, you are going to have a lot of assets because you're going to be buying a lot of machinery that or gym equipment that you use, and that gym equipment is never cheap. And if you imagine, you're probably not going to buy one of them in the gym, you're going to have quite a few. So you'd have like 5 treadmills, for example, or 5 bikes, for example. So you're going to buy quite a few, multiple of them at each venue. So it is going to hold a lot of assets. So I mean, if this company was ever to get in trouble, what it could do is probably shut down a site. The gym equipment it has, it could probably then go sell it off. So it shouldn't be too hard for it to like just, if it ever got into massive trouble, to kind of sell off of some of these assets and it could get cash. So it's from that kind of view, that's why it's an okay balance sheet, because of the amount of assets it holds. It would just be better with a bit more cash in there. It did pay a 1.2% dividend yield. Obviously that's now being cut, but at the time it was a pretty decent payout rate of 20%. So maybe at some point we'll see what it does with that dividend if it comes back. Obviously that was a growing dividend. It might be a little bit tricky because if it has to burn through its cash for this COVID-19, that might depend on the dividend, and it might be focused on paying a bit more debt, because it might have to raise money from here, depending on how quick it can open up. But we'll talk about all that in a second. When we look at the insiders, it is a fantastic insiders. I'm a big fan of seeing insiders buying the stock because they have the biggest understanding of the company. They know what's going on inside. And if the inside board are buying their own company, obviously if the company's going to go bust, they're not going to go buy the shares with their own money, are they? So obviously the insiders buying the company is fantastic. There's a lot of insiders buying. The CEO bought 18,000 shares as well, which is a really good sign. So from an insider's point of view, that's definitely positive as well for the stock. Now, when we go into the investors' relations, where I seem to spend like half of my life right now reading investors' relations, looking into these stocks, but it is a company that is looking to grow, and it's going to grow its EPS and revenue in the future by opening up more venues, more locations. And that's how it's increased its EPS and revenue previously, is by having those more venues, and that's how it looks to carry on. It's going to slow these down, it said in the earnings report, because of the COVID-19. So just be a little bit careful that the EPS and revenue won't grow as much this year, but obviously it should come back at some point. And it looks like on the map it was a London-based startup, so it's going to be looking to open up more venues up north, and that's where it sees a lot more potential. Another really positive with the investors' relations that I saw is the revenue per member, and they like to increase the revenue they make off each member they have. Now, if you imagine, if you have the members, and I think they've got so many, I think it's like 700,000 members off the top of my head. If they carry on increasing making £1 out of each member they have every year, and then members keep increasing, that's going to do fantastic for them. So they're able to increase that revenue they make off all the members every year. That's fantastic. They say that this is due to a new program they have, which is called Live It. So if that carries on increasing, I think 20% of the members use it now, but if they can get that somewhere up to 30-40%, obviously that will help revenue per member carry on growing, which would be super. Now, one thing on the kind of industry as well, it is a very competitive market. When you look at the UK market share, it's doing a very good job, but you look at how much competition there's a lot of competition, and it's quite a cyclical kind of market where there's not too much loyalty in this kind of industry, as well as that obviously the competition as well. It's a very difficult market. When we look at a moat of a company like this, it's not very hard for your average Joe to kind of open up a gym and maybe take away some of your members. So it is a market that is very hard to kind of keep that loyalty. That's kind of one negative, but at the same time, even if that happens, the amount of growth that the gym group is showing is pretty good. I'm just going to say right here, if you look at JD Sports, I'm going to be mentioning that their gyms in my conclusion a little bit later on, so just remember about that one. So overall, what's my kind of thoughts on the gym group? Well, I actually really like this company. If I was to give this a rating, I would say that it's a buy. I think that this company, if you invest in this company, you probably do really well. When you consider the discount that the stock's on as well, it seems like a really good opportunity to buy it because it's at very, very cheap prices compared to what it has been previously. and with the industry growing and how well this company looks to grow as well, I think you should make a decent investment on this and make some good money. Now, there is a few little risks that I'm going to put out here with this one, and obviously it's a very competitive market, so just be careful of that. You've got the COVID-19, and with the gyms, it's a very hard thing to manage because obviously when people are going into gyms, how they're going to manage that equipment? Are they going to be cleaning that equipment every time? Are they going to stop people coming in for 10 minutes and then everyone runs around and cleans all the equipment? So you've got to kind of imagine this kind of industry might be closed for a while, which could really affect that balance sheet. So just be really careful of that. So if you're getting like towards the dividend side of it, just be careful because it might have to take a lot of debt on with it not opening. So the balance sheet might not be as nice. That might mean might pay the dividend. Obviously with the COVID-19, we don't know when they're going to be opening up. So just be careful of that because the stock might carry on going down if it doesn't have the ability to open. But you know, when you look at that kind of risk to reward, I think the reward isn't too bad on this one. But those are just some things to be careful in mind. Now, from my kind of point of view, I'm not going to buy this stock, and the reasons why is this: because of the COVID-19 and the leisure industry, I've already got a lot of exposure in the leisure industry, and I think the stocks that I'm in, I think I prefer them a little bit more. I like the gym group, don't get me wrong, it's a good company. It'd probably be a good investment, but I've already got a lot of exposure to the leisure industry, and I don't want to have too many companies that are kind of vulnerable to this COVID-19, because if it gets worse or there's a peak, my portfolio is going to get really affected by that. So I've got to be really careful about the companies I invest in that have a lot of their revenue depending on what the situation is. So if you look at my portfolio, leisure industry wise, you know, I've got Carnival, they'll definitely get affected. I have already got JD Sports, which also has like exposure to this industry because it owns JD Gyms. So I'm kind of already in this industry with this one, and I believe that they're a little bit more diverse. So that was, you know, the better investment for me. So because I've already got an investment in here, in this kind of industry, I got to be really careful about how much I put myself into, you know, putting all my eggs in one basket, for example. So because I have an investment and also other investments in this kind of leisure industry, Hollywood Bowl, that's another leisure company. I've got to be careful not to go too heavy in one industry that is like the most effective in industry. So because I have investments in it already and not wanting to get too much exposure, I can't myself for my portfolio buy this one. But as my overall view, I do like the gym group, and I think it is at a decent valuation right now. So it is one that I would rate at a buy compared to some of the ones that we've had like Aston Martin. So I do like this one, but for me, I just can't buy right now because of what stocks I already hold in this industry. And also I own a competitor already. So it doesn't make sense for me to go and buy this one from my point of view. But so let me know down below if you guys are buying any of these shares. I'd be really interested to know. And I hope you enjoyed the video. As always, smash that like button, subscribe if you haven't, and I'll see you in the next one.